So hello friends, here I will discuss the key important income tax changes in budget 2026. One is the lower TCS rate. Now for TCS rate for the foreign remittances will be 2%. Either it is for tour and travel or medical or foreign abroad studies or anything. Before for tour and travel and all it used to be 5 to 20%. TCS rate it used to be. Now one rate 2%. Second, housing loan interest rate. See, if you are constructing a house, then you will be borrowing from the bank. If you are taking loan from the bank, you will be paying interest. There, for self-occupied house property, up to 2 lakhs rupees, you can claim the interest as expense in your income tax return. Deduction will be allowed. Okay, that deduction 2 lakhs cap which was there during the construction period, you cannot claim it. After construction is completed, then you claim. So what about the pre-construction period interest? That interest was allowed in 5 part after the construction is completed. The doubt was that 2 lakhs limit which is given for the self-occupied property, whether the pre-construction period interest is also covered under that 2 lakh or it is after the 2 lakhs we can claim in excess of 2 lakhs. So it is clarified that the 2 lakhs cap is for the overall interest. Okay. Third is sovereign gold bond. RBI is issuing the sovereign gold bond. Now RBI has stopped issuing sovereign gold bond. Since the gold prices is skyrocketing, government has come up with that sovereign gold bond will not be tax free anymore if you are purchasing from the secondary market, or even though you have purchased from the RBI but you have sold it before maturity. So if you want the exemption, already you are holding the sovereign gold bond, hold it till maturity, then only it is tax exempt. If you are going to sell it, it will be taxable. And if you are buying from the secondary market now onwards, it will be anyway taxable. Third is STT. STT on security transaction tax on future and option, it has increased. Okay. Dividend and mutual funds. If you are borrowing money and investing in share market, getting dividend, mutual fund income, you cannot claim the interest on that loan which you have taken. That loan interest. So on the gross income, gross dividend and mutual fund income, it will be taxable without any deduction. Third is employee contribution to PF and ESI. So any employee contribution before, what was that? If you are paying the employee contribution after the due date, it will not be allowed as a deduction. But now what government is saying, even though you pay it before due date of income tax return, it will be allowed. Third is manpower supply. Manpower supply, the TDS will be deducted under 194C. Okay, and belated return. Now the non-profit organization, they can file a belated return and they can retain their registration. Before, if non-profit organization, they used to file the return, suppose after the due date they miss their due date, the exemption will not be allowed. So now they can retain the exemption even though they are filing the belated return. Some due dates have been changed. One, for non-audit business SSC, due date for filing ITR has been extended to 31st August. Now permanently due date is 31st August for those people. Revised return you can file till 31st March of the next year. Before due date was 31st December, 9 months was there. Now 12 months time is there. Updated return. Suppose you have received the reassessment notice, even after issuing the notice, you can file the updated return. You have to pay some 10% penalty with interest and you can file your updated return also. Third is updated return for reducing the loss. Suppose you have filed your original return with loss. Now you want to reduce the loss by filing the updated return. Before it was not, utility itself was not allowing. Now you can file the updated return while by reducing the loss. Third, TAN. If you are buying a property from the NRI, before for TDS purpose, you need to obtain the TAN. Now TAN requirement is gone. With PAN itself, TDS will be deposited. Third is some penalty. Now it has changed to late fees and the amount also changed. For tax audit report, if you are filing the tax audit report by 1 month, within 1 month from the due date, if you are filing 75,000 late fees. If you are filing after the 1 month tax audit report, after 1 month of the due date, then it is 1.5 lakhs. Same way, now TP report, if you are filing 1 month, within 1 month from the due date, 50,000 late fees. If you are filing beyond 1 month from the due date, then for the TP report, 1 lakh rupees penalty. Share buyback, I will say. Okay. Share buyback, what happens? If a company buybacks its share, you are holding shares of a company. Now company gives you offer that I will purchase your share. Okay. Before, what was that? That share buyback, it was considered as dividend. So it was taxed for the taxpayer under the head income from other sources. which means what? Which means you will be paying as per the slab rate on the income from other sources. On the other hand, you purchase that share, you had that share at some purchase price, there is no sales against that share, no capital asset has been sold, so that purchase of share, it will become loss, sale price will become zero and it will be loss, and if you are not holding any other share, that loss you cannot set off it. So what government has said, for individual taxpayers, okay, who are not promoters or promoter companies, if the company is buying back the share, the buyback of share also will be considered as a capital gain, it will be taxed under the head capital gain. So this was actually, it was required, before it was ambiguity, so that is good, now the good move by the government. Thank you.